Welcome back, bro.
Thank you very much. How are you, Dale?
I'm, fighting the battles every day, just like you, for how many years now, bro?
Since 1995, so whatever the math is.
Uh, you're, you're still a pup.
Well, relatively speaking, perhaps,
Yeah,
yeah.
relatively to me, everyone is. So, it's great to have you back. And, I have talked to Dave over the years, going back to FX Street. And isn't this the second time you've been here on Face?
I think maybe this might be third or fourth.
Oh, wow.
Third or fourth.
Two and a
Yeah.
half years. You're almost a regular. So,
Yeah.
Dave, pretty interesting morning to walk into, right? With crude up $5. I can't remember last time we had an opening like this. I was talking to our community that there was this expression, "Don't go home short crude" on on Friday over the weekend, and
Mhm.
it's never. I can't remember the last time it hurt someone to do it. So, have you heard that before?
I've not heard that, but obviously oil's a very tricky market to trade. It's not really one that
Oh, they all are.
yeah, I find oil particularly tricky. I don't really trade it, but obviously I
Yeah.
monitor it just because of the impact it has on other asset classes. And I think actually what's interesting is that when we've had previous spikes in oil, and there's been three previous instances, I think since 1991, the moves have generally been faded overall and by a large degree. So, maybe it's different this time. I always hate to say that, but
Yeah.
if it isn't different this time, this move is likely, if you happen to be long crude or let's say USO, probably not a bad idea to be taking your profits and counting your blessings.
Right. Or at least a portion, half,
At least a portion, exactly.
just in
Um,
case it is different this time.
just in case. I mean,
Yeah.
again, you start reading things and you can deviate from your narrative, and sometimes that's good, sometimes that's bad.
I'm a big believer in partials, Dave, aren't you? Because, it kind of puts you in a psychological win-win. Like if you came in long crude, you go the door on part of it, you got paid.
Yeah,
And then you're there. If it continues, this is a breakaway gap and we get a runaway gap, you never know. That, it also helps your psychology by taking all the heat,
yep,
all the risk out of the trade.
exactly, exactly. You never go broke ringing the register.
Bernard Baruch. All right, buddy. So you're looking at kind of an interesting pair. Are you
Oh,
looking at CAD yen
I
because
am.
of, huh?
Well, I had it up here regardless of what happened today. I'm overall bullish on the market. This might throw a monkey wrench into it, but by and large, it doesn't seem to be
You
a
mean
thing.
equities?
Yeah, I'm
Okay.
definitely bullish on the S&Ps
All right.
overall.
So
And
this is a risk on pair.
this is a risk on, and CAD yen looks as though this certainly to me looks like a very corrective move. I have it labeled as a wave four. I
Okay.
did start nibbling on CAD yen this morning because I do think the S&Ps will go higher. There's a lot of reasons to believe that it will, not only the interest rate policy, but Chinese cutting reserve requirements last week. That is certainly, or actually a couple of weeks ago, that is, at least historically speaking, indicative of a higher S&P by anywhere from 10 to 15% historically speaking. So
Okay.
yeah, there's a lot of negative talk out there and whatnot, but let's be honest, the trend continues higher. The Fed's being accommodative. Yeah, there's some wild cards here, but I don't know
What
too
if
many.
we took out 2940, the breakout of the ascending triangle? I mean, is there a line in the sand? We all could have views and biases, but we also have to know when the picture changes.
Yeah, I
Okay.
would say, I'm just pulling up the S&P chart right here. Yeah,
Yeah.
we this trend line right here. I do have this labeled as a B wave, which could allow us to go down to test, 2,800, 2,900.
Okay.
Again, that's how I have it labeled as of now. The backdrop doesn't really feel quite like that, but that is a real possibility. But for me, if we get down, let's say 2940, 2950 in here,
Yeah.
I might start to reevaluate my overall view. But for
Right.
right now, it just seems as though the market wants to grind higher.
Yeah, because that triangle would measure 3,100, wouldn't it?
Oh
Just
yeah,
the breadth of the formation from that low
yeah,
2780, 160 on 2940 gives you 3,100.
yeah. I would say that's reasonable. again, also based on the move last week, value relative to momentum. When that type of a move happens, when you get that big pop in value relative to the momentum.
Like the Russell outperforming, bro?
Exactly. You typically will see the S&Ps, move anywhere from 3 to 4% higher within a month or two. So, simply do the math. That takes you up to 3,100, perhaps a little bit more. And, again, it doesn't mean that this attack on the oil refinery doesn't have some sort of an impact, because it easily could. Right now, price action doesn't seem to really suggest that it's much of an issue other than in the oil market. S&P seems to be taking it in stride. Dollar Norway's given back all the gains that it had overnight, or I shouldn't say all the gains, but the Norwegian krone's pretty much given back all the gains it had overnight.
Yep.
Dollar CAD still fairly weak, so Canadian dollar still rallying, but again, off of the best levels. So it'll be interesting though when we open at 6:30. But for me, I'm still looking at risk on. So I'm looking at CAD yen, looking at S&Ps. I want to be short 10-year notes, long Kiwi. Not so interested in long euro anymore. It had a fairly decent move last night, back below 110.50. So I'm not quite as interested now.
Dave, I'm interested, and I know it's not a forecast and it's not a wave count, but I'm really interested because I do interview a lot of people that use Elliott. That's their methodology. How there could be so many different interpretations of where we are by guys that are good like yourself. What differentiates your Elliott wave or different people's take on Elliott? Do you think there's anything about what you do and the way you see structure that's different than, because I'm sure you look at other people that use Elliott and you go, oh God, that counts. I don't know how they're coming up with that. Can you kind of tell me how you differentiate yourself using Elliott wave?
Yeah, it's a great question, and it's an opinion of mine that's evolved over the years, just as you garner more information and more more experience. And frankly, I don't want to say a lot less, but I definitely put less emphasis on the technicals than I did, let's say, 2, 3, 4, 5 years ago. That's not to say that it's not important. It's really paramount for the most part, but integrating in other inputs can really help you substantiate or refute what you're seeing as the wave count. Because as you said, Elliott wave, there is a degree of subjectivity. There's the objective rules, but then there's the subjective way as to how you view the price action within that objective framework. So that's where you come up with, at times, forecasts that are at odds with other people that are practicing the Elliott wave methodology.
Yeah.
So, I like to rely on like quantitative analysis, trying to look at different data points or, historical sets of data that might support what I'm looking at the wave count.
Well, I think you kind of demonstrated it when you were talking about how value came back last week, which is kind of a market tell. Then you go look at your charts and go, you know what, there might be more that's bullish the market, even if it's more bullish Russell or so it's kind of a more of a holistic approach and not just A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, 1, 2, 3, 4, 5.
That's exactly right. I've never been a believer that anything's formulaic in the markets. There's an element of it, but there's also that development or that element of feel, intuition, and in this case, other sets of data that can help you with your decision-making process. And I've come to really rely upon that as that second piece. And, I also look at a lot of, especially on the FX market, I look at a lot of options data, risk reversals, implied volatilities, that type of stuff. When you add it in on top of the technical analysis, you start to get a slightly clearer picture. Again, you're never going to check all of the boxes to know if you're 100% right. That's just impossible.
Yeah.
But again, I'm trying to eliminate the false positives as much as possible, just like anybody else. And for me, having that base case on a technical perspective up against these other two inputs, quantitative data, options data, for me, it works. It gives me a better sense of what I'm looking at, and increases my conviction, or maybe it lowers my conviction and prevents me from taking a silly trade.
So can you use FX options, volume and size, and people going in, like say, for example, a lot of guys that are option guys in equities, they're looking at, a huge increase in open interest or a big size trade, and that gives you a tell plus where all the major open interest is a week before expiration. You know that the guys that are the house are going to try and pin it near that strike so that no one makes money?
I'm not really looking at that so much. I'm really looking at more of, how the market's positioned in terms of, what the risk reversals are saying. Are the out of the money puts more rich than the out of the money calls? How's the view on a particular pair? Where is it trading in its historical percentile? I've got a window up here that you can see on the screen right now. All this data comes off my Bloomberg terminal, and I'm looking a lot of times at what this percentile column is right here. And you'll see that a lot of these numbers right now are just kind of, this is on a scale of 0 to 100. Pretty much
you'd have to stop your share and move it to, I guess, because we're not seeing your Bloomberg terminal or any of that. But
that's interesting. I moved the window over there. I wonder why you can't see it. Interesting.
Maybe just hit the share again, and then
I'll just
share again. That'll do it.
A different screen. Yeah, give me a second here. I'll
okay.
Move that over.
So audience, community, as you can tell, Dave's not just a veteran, but he really, is proficient at doing this. And so I learned a few things for you that I'm going to start taking a look at, Dave.
How about this right here? Can you see that?
Yeah, yeah.
Okay, so I'm gonna make this window. This is the window I'm focusing in on. This is one of the pages on my Bloomberg. But what I'm looking at right here, these are the major pairs that I follow. But I'm looking at this percentile column, and as I said, it's on a scale of 0 to 100. Mm-hmm. As you can see right now, all of these risk reversals are basically kind of right in the middle of the range, which basically says there's not a whole lot of information to be garnered. I'm looking for these risk reversals to start trading at, in the lower 5 percentile or the upper the upper 95 percentile. That's when I start getting interesting. So something like Euro Sterling right now is the only one that's trading in the lower 95th percentile.
So that would give you what kind of bias?
Well, it means that everybody is so overly bearish Euro Sterling. Okay, that doesn't mean that it's a spot, but you take that piece of data, overlay it on top of the technicals, and
that's interesting, Dave, because actually I think this sell-off we've had in Euro Pound is setting up a buy.
Oh yeah, for sure.
I'm looking at maybe 61.8 back, and you've just given me a pearl. So I know that if that's correct, that it's a buying opportunity. There are a lot of wrong-footed traders in there, is what you're saying.
Exactly, and
cool, Dave.
We have been short Euro Sterling for the last couple of weeks.
Yeah.
And we're cleaned up and we're ready to go long. I'm not going to just blindly buy it in here. I want to see some sort of a confirmation of prices moving higher. But with this type of data on my radar screen, and then I'm looking at some of the volatility skews, again, that just gives to me some indication of, maybe getting on the other side of the market because everybody's positioned on the other side of the boat.
Could we see your count in EG?
Yeah, I'll go back.
What you're looking for
right now? Yep. Let me go back to that particular screen. It's interesting that I can't bring over a window into the other one. I should be able to see my count right now.
Got it. Yeah.
Okay.
Got it.
So again, the overall count is bearish, but again, I'm not saying that, just because the information I'm seeing on the options market is kind of a short-term, is a bullish indication, it doesn't mean that that's a forecast that's going to last for months and months. I mean, the options data I'm looking at is basically using a 1 month look back period. So
Okay.
best case, minimum case scenario, I'd expect a bounce higher in euro sterling. So my overall wave count still suggests we go much lower. As you can see, I've got wave 1 down, wave 2 correction. Even if we just go from where we are now, 88.50, all the way up to 89.73. I mean, again, that's a nice 100 pip, type trade.
So is three going to be some fib extension of the first wave down?
Exactly. I mean, if in fact this wave count prevails, wave 3 is going to be, somewhere like, let me just pull this in here a little bit so you can see it. Wave 3 is probably going to come in somewhere down around 86.40, which would be about 161.8% the length of wave 1. And I know that looks a little cluttered right now. So
no, that's cool, because I think that's also about 78.6 back of the whole up move.
Let me go back to that daily chart.
And that's where it turned good.
Yeah, exactly. So,
yeah.
So again, the overall trend does appear down based on the wave count, but
Right.
For a short period of time, we can be bullish on this and kind of catch, like you said, some of the traders maybe being
just a scalp
positioned. Yep.
Okay. All right. So why don't we go back to the menu you prepared and what you wanted to talk about?
Yeah. Well, let's just
sorry if I've interrupted you too many times and got you off track.
No, you haven't at all. I mean, I'd rather have some questions from, what everybody viewing might want to hear about, what you're seeing. The one thing, I'm going to go back to another screen right here, because the one thing I think is really helpful to keep in mind is this right here. This has been the ultimate barometer in this market over the last several months. And let me move that down. Again, back on the Bloomberg terminal here.
Yeah.
This is simply a measure. The yellow line is the S&P 500.
Yeah.
The white line is basically the spread between investment grade corporates and junk corporates. And it's a very, very simple relationship. But when that spread narrows, when you see this white line moving down, I know this is incredibly simple, but sometimes the simple things are the ones that are the most valuable. As that spread narrows, the S&Ps rally. It's really that simple. If that spread continues to narrow, which it looks as though it's about to, I don't see any reason on earth why the S&Ps won't take out the new highs.
Okay, so that's basically saying there's no credit stress.
No credit stress.
Even though TLT's got hit hard, there's no credit stress. It's probably just a normal correction that we've had in yields and bonds.
That's exactly right. And again, you'll actually, in this case, oddly enough, I'm bearish on the 10-year notes, but that doesn't mean that I can't be bullish on the spread between junk and investment grade corporates. And if that spread narrows, that's bullish for the S&Ps.
You're bearish 10-year notes, meaning higher or lower yields?
I think yields are moving higher. In fact,
okay.
again, using some quantitative data, we've been short 10-year notes. We got short basically at the beginning of September. Again, sometimes it's better to be lucky. Nice big move lower. I actually think if you're looking for a trade, you should be looking to be a buyer of TLT or a buyer of 10-year notes, because again, using some quant data, let me find it.
I agree.
Over the last 40 years, and I'm kind of reciting here because I made some notes. I can't remember all this data verbatim. But over the last
look at all your gold that they're showing on Bloomberg.
I'm sorry?
All the gold. They were showing all your gold bars on Bloomberg.
Oh, yeah. That's my office right there. They always show me commercials.
There it is.
But if you look, there it is. See, and I'm questioning, where's all my gold? There it is.
What's your address?
Over the last 40 years, and I think this is really an important data point. Over the last 40 years, when the 10-year yield has moved 3 standard deviations below the 2-year moving average, the on average pop higher in yields is anywhere from 4 to 5%. So
okay.
What that essentially means is that something like TLT and or 10-year notes could rally of that same magnitude.
Okay.
That makes sense?
Yeah. Yeah. So you're looking for lower yields, higher TLT, and this was a pullback to buy in TLT.
Exactly.
Got it.
Yep.
I tell you what, Dave, I could talk to you for hours, but I think that you've demonstrated that I've learned some things from you in 25 minutes. I want our viewers to know how they could follow you and how they could get a hold of you, and maybe it's a good time to show your website.
Sure. Well, website's pretty straightforward to get to, aspentrading.com. Let me know if you can see this, because
Not yet. You're still on Bloomberg, but
oh, that's right. That's right. I'll go back to my
okay.
terminal here. And give me a second here. I'll get that.
It was really great talking to you, Dave.
Oh,
I mean,
likewise.
I came in without a lot of clarity, and I have more after talking to you.
Well, I appreciate that. Okay, so let me change the screen here. And I'm happy to address any questions as well. I mean, that's where a lot of people get some value. You should be able to see my screen now.
Cheryl says, wonderful analysis. Cheryl's thanking you. Euro GP might be setting up. Oh, they're talking about my stuff, a 3 drive on a 4 hour. Okay, so there's Dave's website. Yeah,
so I mean, there's a lot of things you can check me out on. Obviously, this is recorded. You can review this. We do have a YouTube channel. Just search for Aspen Trading. I'll usually put a video up there once every other week or so. And if you want, you can just take a look at our research. You can get on for the first month at half off. So just hit the get started. It says get stated. Looks as though that's a typo. Get started. That'll allow you to get on the research at half off for the first month. And then I'm on Real Vision quite a bit. And I suspect a lot of your subscribers are also Real Vision subscribers. You can see me on there.
Oh yeah, they interview our team too.
Yeah, so
Blake and Steve and
I'm on in fact, I'll be doing a new Real Vision video on Wednesday after the Fed meeting. That'll go live on Thursday, so that'll be my next, kind of in-person.
Nice.
But
I just saw a great one. They had this Chinese guy that I forgot who was. Kyle Bass, I think, was interviewing him on Real Vision. You have to watch it I think Stelios put it up. This guy, escaped and, China, jails or kills people. Anyway, so great, they're a great resource of content. They get the best of the best. And you know what? That's a feather in your cap to be on there.
Yeah, I appreciate it. It's been it's been great working with them over the last, almost 4 years now. So
thanks for coming to a Little League game with us today.
Who is?
I'm kidding.
Oh.
Thanks for playing the small stage with us.
I wasn't quite following that for a second.
Yeah, all right.
I'll go with Dale, but I don't know where he's going here.
Yeah. Well, really appreciate you being here, Dave, and it's always good talking to you, buddy. And
likewise, Dale, I really appreciate it.
I hope that pips just drown you and your subscribers going into from here to the end of the year. And
I appreciate it.
That you prosper and stay in good health, my trading warrior brother.
All right. Thank you very much, Dale, and thank you, everybody, for having me on here. I really do appreciate it.
It was great having you, Dave. Everyone thank Dave Floyd at Aspen Trading 10. That's his Twitter handle where you could follow him. And everyone, remember, don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. Adios. Thank you, Dave.
My pleasure, Dale. Take care now.
All right, buddy.